Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news behind the tariff headlines that shows impacts of recent policy changes are starting to show up in some places, but not everywhere yet. US jobless claims fell slightly last week, and at about at the level seasonal factors would have expected. There are now 2.08 million people on these benefits, about the same level as last year. And that was the first of some marginally better data out overnight. The US merchandise trade balance pulled back in February from its record January deficit, but it still came in far higher than was expected. US exports stagnated, but imports were 19% higher than year-ago levels. US wholesale and retail inventories rose, with wholesale inventories up 1.2% from a year ago, and retail inventories up 4.6% on the same basis. Supply chain inefficiencies from the new tariff policies are starting to show up now. US pending home sales came in 3.6% lower in February than year-ago levels, although the industry emphasised the 2% rise from January. And the Kansas City Fed factory survey was a touch more positive than expected and better than in some other regions, but they too had lower new order levels, so this positivity probably won't last. In the Washington swamp, overshadowed perhaps by the obvious lying by their unqualified defence secretary, the administration has hit car makers with new 25% tariffs. This will likely have a significant global impact on manufacturing as well as destabilising local supply chains. It is a move that may not play out as they want and will almost certainly mean US-produced cars will cost a lot more. GM's share price is down 7% today, which accounts for most of its year-to-date drop. Ford is down 3.2%, Stellantis is down 4.3%. The big local producers are not expected by investors to do well out of this change. And they're not the only ones being hit. The recoiling of international tourists going to the US has seen substantial drops in the value of major US airlines. Delta is down 21% so far this year, United is down 22%, and American Airlines is down 35%. The whole industry is down 16% since the start of the year, with those with extensive international routes worst hit. And this is despite global air travel being up 10% in 2025. The final review of the fourth quarter 2024 economic growth rate came in at 2.4%, which means that for all of 2024, they recorded an economic expansion of 2.5%. Both outcomes were marginally better than expected. 2025 has gotten off to a rocky start, though, for them. In China, after the January 3.3% retreat, industrial profits are expected to be reported up 4% in February. But in fact, they came in 0.3% lower again, so a market surprise. The state-owned enterprise group saw profits rise 2.1%. Public listed companies saw their profits down 2%. Hong Kong Macau companies reported a 4.9% rise, and other private enterprises suffered a 9% drop. In Europe, the Norwegian Central Bank kept its key policy rate unchanged at 4.5% for the 10th consecutive month in its overnight March review, as widely expected. In Australia, household wealth was up 0.9%, or 144 billion Australian dollars in the December quarter, the lowest growth since September in 2022. Year on year, this was up 6.6% at a time inflation accounted for 2.4% of that. On that annual before inflation basis, their dwelling values only rose 4.4%. Their superannuation was up 9.3%, however, and the value of their bank accounts were up 8.5%. And following their 2025-26 budget, the Australian Treasury said it has raised its target bond fundraising from $100 billion in the coming year to $150 billion. Swap spreads then dived, indicating that demand for this debt could be hard to find. Expect Aussie government bond yields to rise sharply. It is widely expected there will be an election date announcement later this morning, and most are picking a May 3 date, to be when the Aussies next go to the polls. Their recent budget seems to have gone down well with the electorate, so they want to capitalise on that. Globally, container freight rates fell 4% last week and are now 31% lower than year-ago levels, but still 53% above pre-pandemic levels. Freight rates for bulk cargoes were essentially unchanged last week from the prior one, to be 19% lower than year-ago levels. And the US Treasury 10-year yield is now at 4.36% and up 2 basis points from yesterday at this time. And the price of gold will start today at just on $3,049 an ounce, up a net $32 from yesterday. Oil prices are down 50 cents at $69.50 a barrel in the US, while international Brent price is just over $73.50 a barrel. The Kiwi dollar is now at 53.3 US cents and down 10 basis points from this time yesterday. Against the Aussie, we're also down 10 basis points at 91.1 Australian cents. Against the euro, we're up 10 basis points at just on 53.3 euro cents. That all means our trade-weighted index starts today at just on 66.9 and down 10 basis points. And the Bitcoin price starts today at $86,905, very little change from this time yesterday. Volatility over the past 24 hours has again been modest at plus or minus 1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.